the informed investor. Thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.
Charles Tarbey joins us in the studio, the chairman of Century 21 Australasia. If you've got a question or a query of Charles about investing in real estate, he's the man to ask. 131873 is a number. Charles loves to take your calls, particularly on property in places where not many other people would know what the prices are. Charles, good evening to you.
Good evening, Steve.
In this political climate where you've got this Royal Commission into the banks and talking about lending practices and people being given poor advice, does that affect the real estate market? Do people sort of put their hands back in their pockets?
It does, but more so the banks. The banks are the ones who put their hands back in their pockets because they're a little bit terrified of what's going on out there, and they're concerned about making sure that they stick to the strict policies of lending that have been put in place. As you can see, some of them got a little bit out of touch with reality, and we can see the end result of that, Steve. But realistically, when I've been speaking to the banks lately, they're just playing it absolutely 100% by the books, which I guess we all assumed they were. But some cases that wasn't happening. And those that have been playing it by the books have been caught up in the rorts that other people have created. And so they're watching everything they do just ever more closely. One
of the tactics they use, of course, is whenever there's an interest rate cut, and we've had plenty of those, there's been no movement recently, but we went from a long way up to a long way down. The banks don't pass that on. You've actually got to ring up and ask.
Yeah, I know. That was a little bit sad. And in some cases, as you know, they don't match the RBA's reduction or increase. And in some cases, they applied it themselves. So they put the money, the interest rates up or put them down. And it sort of gets hard for the RBA to help in government policy in terms of implementing a procedure that benefits what is needed at that point in time. It really does get strange.
You and I are not here to give financial advice, but clearly if you can afford it, that's a good thing, though, if the bank does that. I mean, they should tell you, but if you can continue to pay off more on your loan than you need to, that's sensible financial management.
Yes, it is. Look, and as you rightly said earlier, you ring your bank. Look, I had a situation with an electricity company, for example, on a substantial number of properties. And so one of my team called and said, hey, we're moving on, and off we went. And now it's been for an entire year now that they're still calling, the old company's still calling, trying to work out why, and can we come back? And I know that banks are in the same situation, because if you look at the thousands upon thousands of loans that are transacted over a period of time, a substantial number are loans that are being refinanced, and that's happening because the institutions are not looking after their existing customers.
Yeah, competition's a wonderful thing. It sharpens people's pencils. When you suddenly ring up and say, I'm thinking about moving, they go, oh, hang on a minute. We can do a little bit on that interest rate for you. We might be able to tweak it a bit.
It's great, though, isn't it? In years gone by, you couldn't do that. But now, of course, there's always that talk about whether or not banks versus brokers. Should you go to a bank or should you go to a broker? Well, because if you've gone through a broker to start with, and what I like about brokers, even though there's been some challenging situations, is that they get paid reward for effort. And what that means is that they will do the absolute best that they can to get you a loan that is competitive. So if you're with a broker and you ring them up and you say, hey, I want to change my loan now because there's a better rate out there, they're going to do work for you to even maybe get you to keep your loan, but even fight to get a reduction for you.
Calls for Charles, 131873 is our number. Story in the News Limited papers today suggesting that once state governments start introducing first home buyer grants, that has the effect of pushing prices up for affordable new houses. That sort of makes sense, doesn't it?
Yeah, it does. And there's a limit, obviously. There's a maximum figure that you can buy a home for you to get that benefit. So needless to say, any property under a certain price range all of a sudden jumped up in price because they became not only affordable, but because of the fact that people were getting a number of different opportunities, whether it's first home grants plus stamp duty incentives, different incentives from building builders on new homes, it made it very, very comfortable for first-home buyers to get in there. And there is a ceiling for them, but investors were pushed out of the market for some time. And I think investors are still going to be held out of the market to some degree because of what's on offer for first-home buyers. Steve, going back in the early days of my real estate career, they had terminating building society loans, and these were government-supported loans, and they were like hen's teeth. And if you could get them, the interest rates were 9.75% and 12.25%. They were two different types of loans, and they were as rare as hen's teeth. Can you imagine now paying that sort of interest rate?
No, I paid 17% at one point. Scott's in Willoughby. G'day, Scott.
Oh, hi, Steve. How are you, mate? Look,
Good.
First to what you were just saying, I bought a property about 2 years ago in October 2016, and I sort of locked in about 80% on fixed rate and about 20% variable. I didn't go through a broker. I was just with my family bank from what my parents had been. Would you have any advice on potentially, changing that or going out to the market and trying to get a better rate, or just based on where the interest rates are at now?
Yeah, I found that fantastic that you were doing that all those years ago, because Scott, a lot of people either took a fixed loan or they took a variable loan. The option of taking a percentage of either is excellent, because, like you said, you do get a chance to reduce your mortgage. But if is your loan still fixed, you still have a fixed loan, because if you do, you're going to pay lots of penalties to get out of it.
Yeah, so you think basically to wait until it gets to the 5-year mark and then potentially look to go somewhere else.
Absolutely, and even the people you're with right now, I know it's fixed, but even the people you're with right now, depending on how long you've been in a loan situation with them, if you flag that you're thinking of moving on, a lot of them will restructure your loan for you now. So I wouldn't close the door, but as I'm saying, if it's a fixed loan and they're tough on you, you can't get out, you're going to be paying substantial penalties to do so. So you've got to focus on the part that's variable if you want to do any debt reduction.
And would you go through the manager, like that you actually originally dealt with, or would you try and go up higher? I mean, like, what's the way?
So did you go through a bank, did you?
Yeah, I went straight for a bank, not a broker.
Okay. Well, I guess if you've got a relationship with a bank manager, you're going to have a chance. If you don't, you're probably going to have to work a little bit harder to get them to see your side of things, Scott. But like most businesses,
call, though, isn't it?
Yeah, like most businesses, Steve, bank managers are incentivised based on turnover as well. So if they know they're going to lose a loan, as I was saying earlier on, when I withdraw an electricity account, if they know they're going to lose the business, they will work harder to get something for you.
Give us a call, Scott. Thank you for calling us. We spoke last week about country New South Wales. We're going to look at country Queensland next week. Just a couple of places around Victoria that you've run your eye over. What sort of value?
I think around the parts of Victoria, they're starting to climb again in prices. We're looking at Hastings. You and I were chatting about Hastings in Victoria down the Mornington Peninsula, and you can still buy reasonable 3-bedroom homes down there for sub or under $400,000 in some parts. I was really interested because we have a representative that works from that office that actually represents French Island, Steve, and that's a massive area.
Kylie Minogue used to have real estate on French Island.
Oh, well, I didn't know that, but it's really fascinating. There's this massive island in the middle of the bay there that
Western Port Bay,
a lot of people don't know about, and they boat people across, etc. And there's some islands for sale. I saw one of the islands in there that one of our team members had the entire island for sale.
You could buy it and put a golf course on it, Charles.
Yeah, it was just sensational. It was Elizabeth Island. I'm not going to put a golf course on there, Steve. The only person that might come out there is you and Ross Greenwood, so I'm not going to make any money out of that.
No, true. Peter's in Tregear. How are you, Peter?
There you go, Steve. You can put your bed and breakfast on one of them islands.
Very good idea, Pete. I'm going to open a bed and breakfast, Charles.
Yeah, okay.
See how much I listen to you, mate. I know everything you say.
Yep.
Anyway, I've got a house in here. I live in Tregear, Mount Druitt.
Yeah.
Right, I'm going to go to Queensland. I've got a property up there already, but we decided we want to buy another one, keep the investment property going, when we get up there, to live on 10
So you want to sell up in Tregear and move to Queensland?
Yeah, in a year or two when we clear, little debts down here. I don't want to go, I want to be debt-free when I leave here. But the point of the argument is, would I buy another property now to lock in the price up in Queensland up near Moreton Bay, right, will I save much by locking in the house now, buying another property? I've got the approval to buy one, but whether you pay it or not, that's a different story.
Yeah, you talk about...
Or I just keep what I'm doing, just keep this house, just flog it here, and just pay whatever price is in a year's time up there.
Yeah, it's a really difficult situation because both markets are moving in different directions. The marketplace you're in, by the way, in Tregear, I still think has upside. That's one of the very few locations when you talk about Bidwell, Havisham, Wayland, all those areas around the St Mary's district or north of the St Mary's district. The prices there didn't rise in line with the rest of the Sydney market. And Peter, you might have noticed that.
Yeah, I know. Mate, when I bought this house, everybody said I was mad buying it, but it's all the time I could afford to move in, one wage and 4 kids and all that.
That's where I've told my son to buy it.
Now, 30
Well, there you go, Peter. Thank you. And there you go. Charles told his son to buy in the same spot. So
I did, yeah.
hang on until he goes to Queensland and then sell it after he goes, yeah?
I think so, yeah.
Good stuff, Charles. Thank you, as
Steve.
usual. I'll talk to you next week.
Thank you very much.
Charles Tarbey, Chairman of Century 21 Australasia.
The Informed Investor, thanks to Century 21. Smarter, bolder, faster. Go to century21.com.au.